Everyone, I'm not sure if we're live, but it says that we're live, so I'm going to give it 10 seconds. Oh, we are live. I think we're live. Okay. If you can hear us on your side, please drop a comment in the chat. It does look like the interface is telling me that we're live. And yeah, so drop some chats in for us. Make sure that you can hear us okay. Make sure my volume is okay. And while I say all this junk, I'm going to go ahead and say, oh, we lost Danny for a second. Let me bring him back. Hey, Danny, how are you? Okay, looks like people can hear us. Perfect. All right, welcome to the first version of this community forum live stream. Apologies for the little delay that we had getting started. At the beginning, we were having some technical difficulties because it's the first time we've done this, but we're here now. So thank you all for your patience. And today I'm joined by the Tesla community as well as a very special guest from Good Soil. Matt, do you want to introduce yourself real quick to the community, and then we'll go around the horn and let Danny and Hans introduce themselves.
Yeah, thanks, Farzad. Excited to be part of this new thing you're launching here. Yeah, Matt Smith from Good Soil Investment Management, basically just like a finance nerd on Twitter who's been digging into Tesla's financials for a number of years, and now I get to do that professionally working with them at Peppers. So thanks for having me on, and looking forward to the conversation.
Absolutely, man. Thank you for coming on. If you guys haven't seen Matt's channel yet under Good Soil, make sure you check him out on YouTube. They do great work. Next up, let's have Hans. Let's have you go next, and then we'll have Danny go last.
Sure. Yeah, my name is Hans Nelson. I have a mechanical engineering degree, and then I have done a few different things over time. I worked in utility cable manufacturing for a little while. Then after that, I did a little bit of work on a master's degree, and I have also been a general manager for a cleaning company for a number of years. Been a Tesla investor since 2017. I've really followed the company probably since 2014, 2015, somewhere there, as well as all the other companies as well, Boring Company, Neuralink, and then, of course, SpaceX. Yeah, and that's kind of my background. I go pretty deep on the engineering side of things, so I really enjoy all the Sandy Monroe stuff, and then Joe Justice is awesome, Farzad's awesome, a number of things. There's probably not too many sources that I haven't spent quite a bit of time researching.
Awesome. Thank you, Hans. And then Danny, we'll let you go last.
Hi,
I'm not least.
Last but not least. No, I'm Danny. I own Elevated Automation. We do packaging and process equipment for the nutraceutical, pharmaceutical industries. I absolutely love automation. Love just creating things that haven't been yet, and install different lines for different facilities throughout the Western United States. And I can definitely get on board with most ideas of what Elon's got going on, just because of how I definitely like his management style, and he just kind of digs in and leads from the front. So I'm definitely glad to be here. I'm glad to be part of what Farzad's got going on here, and it's been fun thus far.
Awesome, man. Thank you. And just for those that are watching live, so Hans and Danny are both supporters of the channel. Thank you guys very much for supporting. But essentially the idea here is every Friday at 11 a.m. we'll have a community forum with Tesla folks that have been following my channel. We get together and we discuss the topics that the community wants to talk about, which I'm very much looking forward to. I think for today's discussion, we'll kick off with the latest news this morning. CPI and inflation not looking too good from what we saw, at least. And so let's use that as a topic to kick off. And then folks in the comments, if you do have a few cents to add in, or if you want to share your comments, make sure you go do that on the comments section, and we'll allow the conversation to be very free flowing here. So anybody have any sort of maybe we'll have Matt go first here, because Matt, obviously you're the one that's probably closest to this, and then we'll go from there. Any thoughts on the inflation data from today, and overall thoughts, and sort of maybe a little bit more detailed thoughts around how that might impact Tesla and others from that point? But yeah, let's start it there.
Yeah, so this has been, I think, the number one metric to look at in calendar 22, because inflation is driving all the fears about how aggressive or not that the Fed will react. in terms of raising interest rates, which then has all sorts of kind of detrimental effects on the economy and particularly on equities. So, like Farzad, I think last time you were on the channel, we were talking about, GDP and like that's important, and unemployment, sure, those are important. But really, right now, for this economic moment we're in, inflation is the number one kind of boogeyman that we are really hoping doesn't continue to show its ugly face. So what we saw today, and I wish I had the exact numbers up. I don't know, Farzad, do you have the exact numbers? It looks like
I can definitely pull them up. I think 8.6 was the top line.
Yeah,
right?
that's right. So it was 8.6% year over year, which was a lot higher. I think it was actually 1% higher than was expected, if I'm not mistaken. So like still obviously way too hot, and in fact higher than expectations for May. So that spooked the markets. I mean, you saw that as soon as that number printed in pre-market at 8:30 this morning, everything just tanked right away, and so that's clearly setting the tone for today's price action. But the interesting thing is core CPI, which excludes energy and housing, that was still a little bit higher than expected, but not nearly as much as the kind of overall CPI, which doesn't have those exclusions. And when I've been looking at this in the past, I mean, far and away, the thing driving inflation more than anything is energy prices. So you've got oil over $100 a barrel, which then impacts, transportation costs. Natural gas is over like $9 an MMBTU, which is like crazy. Because when I was in the energy space, it was always like, gas is going to be $3 forever because we've got fracking. And that's not the case. And so that drives electricity prices. Like that drives the clearing cost of electricity, which is used to make everything. So those are two sets of, I think, pervasive inflation that I probably don't see going away anytime soon. But I do think it's important to keep in mind that these are lagging indicators. So these numbers were for May. I think I've talked about this on my channel a couple times, there are some sources of deflationary pressure, I think, building up. And Kathy Woods has talked about this as well. I've disagreed with her on some of this stuff, but she makes some really good points, I think, about just how much inventory is building up on corporate balance sheets. So like Target, for example, has just way too much inventory. A lot of other retailers just are really overstocked. So I think my take anyways is that you're going to have kind of pockets of inflation. Energy sector is going to continue to be the worst, kind of contributing factor to inflation. But I think there may be other pockets of kind of deflationary pressure, which may help to kind of counteract, especially core CPI. So I would expect that kind of levels out and gets to more manageable levels later this year. But really, that's going to be driving the overall macro story later this year, from my mind.
Okay. There's some background noise coming in. Does someone have some stuff going on there in the background potentially? It's like a leaf blower or something. Okay. Oh, that's better.
Yeah.
Okay. Perfect. Awesome. So yeah, I posted the Gary Black. Somebody mentioned in the comments, thank you, that Gary Black had some numbers. So while you were talking, Matt, I sort of brought that up as well. Hans or Danny, any sort of thoughts around what Matt just described and how sort of it pertains to how you're looking at things?
Yeah, I've definitely been paying attention to what Kathy's been saying about inventories building up. The really interesting thing that I noticed this time was a lot of the things where she expected that inventory buildup to drive deflation. In this last report, we saw numbers actually increase. So things like apparel were up 1% month over month. And so we're not seeing that in the data yet. And then obviously food prices are going to be another thing that's going to be huge, driving core. Both transportation costs driving increases in food prices, but then also all the supply chain disruption coming out of Ukraine and Russia not being able to supply either fertilizer or wheat. And so that's a very inelastic demand market. And so small changes there have big repercussions. And I think we're definitely seeing that. And I'm not sure where the end of the tunnel is on that.
Danny, any thoughts?
One thing that I've noticed, obviously this has nothing to do with Tesla, but I have seen in the past a lot of our work has to do with stainless steel, and I'm sure some of that has to do with all the battery manufacturing and using the chromium and whatnot, and nickel. But just in the past year, all of our stainless steel fittings and everything has more than doubled since last year. So it's definitely, I'm sure there's multiple causes to that besides just inflation. But I know just last the beginning of this June, we've had another increase of all of our sanitary fittings and everything. But so we're definitely seeing just some of those items go up.
Yeah, I think what's interesting to me is that there is this. I know the inventory piece has been brought up as a big deflationary sort of variable that's going to kick in at some point. But I'm curious, like, how does that tie into the fact that we flooded the economy with a bunch of money, essentially, right? So, like, is there like, do we actually think that's going to happen over time? And maybe Matt, this is probably maybe more geared to you, but like, how does the mechanism work of, you have a lot of inventory, but you still theoretically have a bunch of cash that's been flooded in the system since the COVID days. And I know they're going through QT, which theoretically should remove some cash out from the economy theoretically. But like, how is there a way to think about that a little bit better? Do you have any thoughts around that? Because that's sort of where I'm struggling. Yeah.
It does. I mean, on the surface, you think, okay, there's been all this money printing, so of course you're going to have runaway inflation, and that certainly does create some pressure. But the other really important piece to keep in mind is what's called the velocity of money. So how quickly are those dollars kind of churning through the economy? And what you saw in I wish we had a chart we could pull up here, but in the last couple of years, the velocity of money has really drastically decreased. So if all of a sudden velocity of money were to start increasing back to kind of historic levels, while you have this like hugely inflated pool of money, then yeah, I think that would further exacerbate the inflationary pressures that we're seeing. But I think what instead has happened is that a lot of these, so this is the velocity of money M2 supply. So you can see like when the printer really, I mean, it's really been going on since 08. You can see just how significantly that's declined, and then especially in 2020. I mean, look at that; it's just like a straight line down. So money printer, goes brr. There's like that whole meme of course that was happening, but a lot of that was just kind of sitting in assets, financial assets of one type or another, or frankly on bank balance sheets, just in cash. And so if it's just sitting in assets and it's not instead kind of cycling through and increasing, the purchases of like hard goods in the economy, then that's kind of a source of deflationary pressure. So you'd need, an increase in that M2 money supply, or velocity of M2 money supply to really kick in to be a much worse situation. But keep in mind, we've got this quantitative tightening starting now. So the money printer is starting to kind of go in reverse for a little bit. So even if we do see velocity of money, start to tick up, the QT should kind of alleviate some of that over time. Although, of course, QT is going to create, price pressure on assets, financial assets as well. So, it's a weird tightrope walk that's going on right now, and there's no great courses, unfortunately.
Matt, do you know if there is a tight correlation between the savings rate and velocity, or are those loosely correlated?
And if you don't mind, Matt, before you answer that question, could you describe what velocity of money actually is, just for the audience, in case someone's not familiar?
So I'm not an economist, so my definition might be slightly off here, but it's essentially, for every dollar that's outstanding, that the Fed has printed, how quickly is that circulating through the economy? So like, is it going like right from like my bank account to the grocer, and then from the grocer to the farmer, and then from the farmer to the fertilizer supplier? Like, how quickly is that chain of events happening? Or is it just sticking in my bank account and not moving? So it's essentially how quickly is that money moving through? And so, a lower velocity is essentially, there's like a tube of money in the economy that's kind of blowing. It's like, how fast is that pipeline of dollars going? And so what you've seen is that, sure, like the tube itself got bigger because you got more money supply, but the flow of dollars the rate at which they're going through the economy has really slowed down quite a bit. So that's maybe a non-economist way of describing what velocity of money is. And I'm sorry, what was the other question?
Go ahead, Hans.
Yeah, just what the relationship between like consumer savings rate and then velocity of money. I would assume they're correlated, but then there's a lot of other variables that would affect that besides just consumers with all the banks and other places where money goes.
Yeah, I'm not sure that they're too tightly correlated, to be honest. And again, I'm kind of like an economist as a hobbyist more than anything. I took a lot of classes in school and everything like that, but definitely not my formal training. But that said, like I know the consumer saving rate was super high back in 2020, maybe it was even 2021. I think it peaked at like over 34%. And so I think what that had a lot to do with like kind of the stimmy checks that everyone was getting, and the frankly the financial assets just being so so much higher. Everyone had a feeling of wealth, and so they were not spending as much that they had been before, and so that really kicked the savings rate higher. But then I think what you've seen, especially in the last 2 months in particular, is the savings rate has absolutely plummeted, and yes, similar to that is the consumer discretionary debt. So primarily credit card debt, that was very low, 6 months, a year ago, and now that is like, I think it was the highest ever month-over-month increase in April. Just a huge spike in consumer debt. So consumers are kind of seeing their paper wealth get eviscerated. And so they're kind of relying on debt, on credit cards and other forms of financial debt to fund their lifestyle. So it was like the opposite problem a year ago, where like people had more money than they've ever had before, and so they were feeling rich, and so they were saving it and putting it into these assets, and then all those assets really like declined in value by 70%. So shoot, now I need to get some debt to just continue to fund my lifestyle. So my sense is, Hans, there's probably more at play between the savings rate. The savings rates are a very complicated series of, whereas velocity of money, you could kind of see there's like a very steady downward trend in velocity of money over the next 10 years. And I think the savings rate has kind of bumped up and down a bit over that time. So I suspect the correlation isn't super strong.
Awesome. Thank you.
I'm trying to pull up that graph that you were talking about, Matt, where there was I think Unusual Whales was the one that shared it, if I remember correctly. I'm trying to go find it, but I think it was at like all-time highs. I mean, I think since 1980, maybe. I don't know if it goes back any time before. And I think my question to that was, I think maybe you shared that, Matt. I can't remember who shared this. I'm trying to find it on Twitter.
The consumer savings rate.
The credit card debt.
Oh,
like it's at an all-time high.
Yeah. It was
anyway.
It wasn't. I think it wasn't the outstanding notional value that was at the all-time high. It was the month-over-month increase. So what you had was like consumers going from like doing really well to, oh shoot, like savings rate plummets and I need to take out a loan to buy my groceries this month. So which kind of makes sense, when you got drastically falling asset prices, you've got inflation like really ripping a hole in consumers' wallets. It's so real wages, which is like nominal wages are, say, increasing 3%, but inflation's 8%. So real wages are down, about 5% year over year. So the consumers are just in a tough spot right now, which is maybe a good segue to the University of Michigan Consumer Sentiment Index, which also came out this morning, and which was like a huge miss. It was a 50. I think they were expecting a 59. Worst level since 2008, or maybe it was even before then, I think. So people are terrified right now.
In Michigan, I think it was like ever, if I remember correctly. I know, here it is. I posted right on my screen as we talk. So this is worst Michigan consumer confidence sentiment ever recorded. And we can see it right here. It's down to 50.2, at least going back to before 19 what is it? 1970. So this is specifically for Michigan, though.
No, that's
Which-
actually, so it's a University of Michigan survey, which is why they call it that. But it's not like only Michigan consumers are struggling now. I think I don't know if it's I assume it's nationwide. I don't think it's worldwide, but yeah, it's just a University of Michigan survey.
So that's even more damning because it's not regional. It's actually going to be it impacts it's a broad impact. Yikes. Okay.
Yeah.
It was a drastic drop from about a year ago down to now. So it was at 85 and it's now down to 50, which is a pretty significant drop. There was a question in the comments.
Look at like 08 and 09. Sorry to interrupt, Farz.
No, you're
but
good.
Like 08 to 09, like I remember like my parents were both working in finance at the time, and they were basically just saying like, oh, it was almost the end of capitalism. Like it was like they were like terrified during that time frame. And this is a much more steep drop to a much lower low. So it's a really big deal in my mind that this is how consumers are actually feeling right now.
It is pretty concerning. I did want to answer the question in the comments real quick here from Buck, and I think this graph here that we just shared, I think this also where my head goes immediately is like, how does this impact Tesla as an example? Like, is this going to actually impact companies like Tesla? But we'll answer Buck's question first. Question is, how much do you think high wages cause businesses to raise prices on goods and cause inflation effects? Anybody want to tackle that? Any thoughts?
Well, Danny's running a business, right?
Yeah, I would say, I mean, for me, I mean, we try to absorb as much of that as we can, but I know the normal narrative of most businesses is if our wages go up, if the cost of what it takes us to complete these jobs or whatnot goes up, then that's usually passed on to the customer. I've heard that time and time again. Maybe that's just a narrative that a bunch of the news outlets will say, but definitely we haven't raised our labor rates yet of what we charge our customers for installation of different systems, but it's definitely getting more and more appealing to do that.
Okay.
Yeah, I would say from my experience, you have to increase productivity. And so, it depends on different businesses. If they can implement technology solutions that really help them get more output with the same labor cost, or, that the increase in productivity outpaces their increase in labor cost, then they can continue to maintain pricing. But if they can't do that, which I think a lot of companies are in that situation, then yeah, they do have to raise prices as they increase wages. And then, but I think as inflation continues to rage, a lot more people are going to have to work. There's a lot of people that are just not participating in the economy. And so there should be kind of a counter pressure coming back on wages, even though inflation is rising, that it's going to draw more people back into the labor pool. So hopefully labor pricing won't just continue to get out of control. I saw this specifically in the cleaning industry. It was almost impossible to get people to work for even, $14, $15 an hour there for a good little while. And I think right now a lot more people need to work, and especially those kind of extra job type things. People are not as picky about needing to make $20 an hour to do that kind of stuff.
And maybe that's why we're not feeling it as much, is because our sanitary welders are easily making 30 to 35. Some of them are making $40 an hour, the guys that have been there and actually running the entire project and everything. So they're already making pretty good money for what work they're doing.
Yeah, I mean, from my experience, that's, I mean, I think like it was mentioned, short of becoming a big strickler on really squeezing out as much efficiency as humanly possible to prevent passing on the cost to your customer because of those high wages, you will pass them on. And most businesses will rather pass it on than actually figure out how to squeeze more margin out of that cost increase because it's easier, and it's a lot harder to be efficient than it is to just pass the price on to the customer. And so I think maybe if we can sort of use this as a segue into Tesla. So within everything that we've kind of talked about here, like I can't help but feel concerned about the economy as a whole. And I think today's numbers, what I'd like to do maybe as an exercise here is to try to figure out, okay, how does this really impact, say, a Tesla, which is, something that we're all four of us are very familiar with. Are we concerned about today's news and how it impacts Tesla the business, Tesla the stock? What's the overall thoughts? Who wants to take a stab at it first?
Yeah, I don't mind going. So I really appreciated your conversation with Drew Dixon the other day, Matt, and he raised some really great points, and I think really identifying like what are the metrics that we as Tesla investors really need to be looking at and keeping a close eye on to make sure that our bull thesis is not in jeopardy. And I think these things really tie together. We're seeing just how much the macro environment really dictates a lot of the multiples that are assigned and just the overall value that the company will receive in the marketplace over time. So, I think that the things that really do concern me in the current environment are we going to continue to see just the macro environment deteriorate, and in what ways will they deteriorate? Like, is it going to be a continuation of what we've seen over the past 60, 70 years since World War II, where we have increasing globalization, and this increasing globalization allows us to continue to have increases in efficiency in supply chains and just driving down costs across the board? Or, I don't know if any of y'all follow Peter Zeihan or any of the kind of global geopolitical strategists who have kind of a dismal outlook on how globalization is going to continue in the future. And I think that does pose a lot of risk to Tesla specifically. Really to the entire market, and Tesla would not be excluded from that. And so, yeah, I guess that's one of the big risks. But I think it would really take a lot of things. Tesla is so resilient; they could overcome any number of challenges if it was just one challenge. But I think the big risk is, hey, do we have a confluence of events that really pose a significant risk, where we've got deglobalization happening, that's just continuing to disrupt supply chains, continuing to make supply shortages difficult to work through, at the same time that we also have potentially just stalled progress on FSD, to where we keep seeing they're making improvements, but we're not able to get to a level 4 system that is really wide release available, that humans don't have to monitor pretty closely in order for it to operate. That coupled with no progress in Optimus. Like, if you see progress in FSD that's continuing, if you see progress in Optimus that's continuing, and those things provide you with the ability to put a lot of hope in the future, I think we've got really good outlook on the stock price. But if you're not seeing those at the same time that you're seeing supply shortages that put a lot of pressure, or supply chain issues that put pressure on margins and global sales growth, I think that's kind of the only scenario where we really need to be afraid that the narrative is breaking, as far as I can tell. What do y'all think?
I don't know if I can kind of do the rebuttal to progress in Optimus and FSD. I mean, from what I've seen, I don't have a Tesla up to this point, but from what I've seen, the FSD seems like every day I see somebody else saying there's less and less. I think even Matt has said this on Twitter before, that there's less and less reactions that he's got to do just to get from point A to point B. A lot of guys are saying that there's a lot of drives where it's a 0, And from an optimist perspective, I'm super bullish on that, just from what I know. What we currently hook up like Yamaha robots and everything to take bottles off lines. It's got a camera on it, so we take a shot of the bottle coming down the line, and it goes over, grabs it, moves it over, and automatically packs it. And that's a dumb robot. And it doesn't matter whether the speed of the conveyor or any of that is changing. I know we've all said that Elon Musk's definitely working 3D chess at any given moment, and yeah, I have no doubt that we'll see a prototype. What is it? The end of September, I believe it is.
Yeah.
Yeah, and to be clear, I'm not saying I expect these things to happen, but I think these would be the things that I would be afraid, like I would be watching and monitoring to see if these things happen. That would be the time that I would be in significant fear.
Yeah, the way I think about it is like, I think if the economy, given today's data, if we don't figure out how to potentially prevent this sort of, if the consumer index is really at all-time lows, below where we were at the financial crisis, if we really have inflation that doesn't seem to be slowing down, and we have recessionary pressures that are going to cause a lot of companies to go bankrupt or lay off workers, we get closer and closer to a world where consumers are going to be ridiculously price conscious, you know? And to me, the only company that has any potential solution to still be a viable transportation company that is not going to be subject to extreme margin pressure and extreme demand problems is a company like Tesla, because of FSD and the potential of having an autonomy network that's going to operate at a fraction of the cost than anybody else. You know, so if you can have, and we have to think about this within the context of like regular people, like the everyday person, right? Call it the 50 to 80% of say, let's use the American consumer, even 85%, who knows, 90%, 95% in a recessionary environment, right? People are going to be penny pinching. They're going to be very careful about where they spend their money on. And say if a company like Tesla comes out with a robotaxi, say within the next 2 years, you know, where if this recession ends up being a pretty deep recession, Tesla's going to have an advantage from the standpoint of they're going to be able to offer a car that's theoretically going to cost, I don't know, 50 cents to $1 per mile to operate, or maybe even less, who knows?
A lot less.
And
less than 20 cents
less,
in my
25,
model.
yeah, 25 cents.
Exactly. And then you put that within the context of high energy prices, the fact that a lot of people are not going to be able to afford a car, right? So on and so forth. And then you're going to have the vast majority of the United States population needing some sort of solution that's going to mirror that sort of price advantage that Tesla is going to have from that perspective. And like, if I think about it within that context, like, okay, if that's kind of where we're going, and people are going to be super, super price conscious, and Tesla's able to capitalize on the FSD and robotaxi opportunity, to me, like, unless another company has something similar to that they can offer, I don't really know why anybody would want to own a car within that context, right? Within the context of a recession and a lot of economic hardship. Now the question becomes: is that actually going to happen? You know, is that actually going to be a thing that's gonna sort of line up with the recession, or the potential recession we're gonna have? But it almost seems like I don't know if the universe will figure this out, but it almost seems like if it really does become a reality that Tesla does achieve level 4 by the end of the year, and robotaxi does start launching next year, like Elon talked about, this could be in the middle of a very deep recession potentially. Okay. So which I think is yet another catalyst for Tesla, the company, and the stock to have a big runway forward, because not only do you have a technological advantage, now you have a price advantage. Now you have the majority of the population wanting to use your services, because literally the alternative is way too expensive. I don't know if you guys have any thoughts about that from your perspective, but that's where my brain goes to immediately within the context of a recession. Is if Tesla can figure out FSD, it's such a game over moment, you know.
So what would you assign that probability at being? Like, in your mind, is that a 50% likelihood, 60% likelihood, 80? And then, yeah, like that's kind of where I'm thinking. I was like, okay, so
Yeah.
what's the chance that's going to happen? What's the chance that it's not going to happen? And then what kind of things do I need to think about and just prepare myself in my mind for in the event that it doesn't go that way?
That's a great question. I'm not gonna lie. Today's numbers spooked me. They did. They spooked me. So for me, the recession chances go up. For me, like a deep recession go up. So it went from maybe like 25% to probably well over 50% in my head. Okay, and I think that going up, knowing the culture of at Tesla, that's going to cause Elon and team to go even harder to ensure that FSD gets released and robotaxi gets released, because it doesn't just become a safety concern, it becomes an economic concern, because the vast majority of people would not be able to afford to drive around in a car or to pay for gas. So I think it adds more fuel to the fire, and the culture at Tesla is very, very good at using existential crises to drive missions forward. And the higher the chance of a bad recession, the higher the chance of robotaxi happening, is how I think about it. I don't know. So if recession's at over 50%, robotaxi by next year is over 50%, in my opinion. That's how I think about it. I don't know. What do you all think?
Yeah, I mean, I'll just say, when I'm trying to do evaluation, which is something I really like to do, and so I like to come up with like different scenarios. So somebody in the comments basically said, like, FSD and the bot in particular are really taboo subjects for Wall Street analysts and probably for institutional buyers as well. And I think that's true. I mean, Gary Black, who is like one of the best Tesla bulls out there, like kind of like a Wall Street insider, but he's still, yeah, David Borg in the comments in that. Gary has a $1,500 price target, even though he's pretty bearish on full self-driving, and he's like just won't even touch the bot. And so I think it's important when we're thinking about Tesla as an investment opportunity to kind of segment the different parts of the business. So I try to value the business as it is today. And when I think about full self-driving in that realm, I think, okay, well, what's the likelihood that take rate may increase, and that more of the revenue will be recognizable going forward? And so what does that do to margins? And so that's really the only variable I play with for kind of like my base case assumptions. But even doing that, Tesla's, I think what Wall Street analysts in particular don't give Tesla enough credit for is just how far their manufacturing has come. So, Q1, we were very close to all-time highs on April 21st, right after Q1 numbers were reported, because they absolutely blew it out of the water. So, it was $3.22, I think, in adjusted earnings per share. And so if you annualize that, and then you compare it to today's price at around at 700, whatever we're at right now, they're trading pretty close to like a 50 PE on what they can do right now. Which Hans, you brought up the Drew Dixon debate, and Drew was saying that he thinks like a 50 PE is about right for Tesla. So I think the market and a lot of the skeptics out there are saying, okay, well, we've got a recession coming, and we all know recessions are really bad for automotive companies. So Tesla's taken this huge hit, even though they're executing really well. So in terms of what am I looking at for, like to try to poke holes and steel man my own bull argument, it's like, okay, well, what's happening with order rate, and is that backlog shrinking? And to be clear, I think the backlog is going to shrink. Like I think you can't have a recession this significant and consumers, feeling the pinch, this much without, it impacting order rate to some degree. To be clear, we have not seen that really reflect yet in the order book. I mean, the order book, the backlog is really increasing right now, which is a great sign, but I'm kind of waiting for that shoe to fall. But it wouldn't be the worst thing in the world if, the backlog went from, 6 to 9 months to 3 to 6 months. It's probably a better thing for consumers anyways. And then if it's a really bad recession and the order rate really falls down to the fact where, you've got demand very close to the level of supply, well, then Tesla just needs to cut prices, which frankly they can afford to do with 30% gross margins, and they're more efficient cars coming online now, or they're more efficient plants coming online now. So when I'm looking at, like Gary's base case, 6 to 12 month price target of $1,500, I think that's really reasonable. And then on top of that, you've got all the upside of, okay, well, what if like the analysts are totally shocked and Tesla actually does achieve, level 4, or maybe it doesn't even solve that, but it's so clear from the hundreds of thousands of beta testers out there that Tesla is really close to, getting the right approach solved. Like if it's that situation, like you don't necessarily need like one particular test to be solved or to like have a small robotaxi pilot in Miami for the market to say, oh shoot, like Tesla's approach actually is credible. And so then you go from a point where, okay, maybe with the macro situation the way it is, with multiples coming down, even with Tesla executing at a really high level, then maybe, the valuation gets compressed from what Gary's saying, but maybe it's still like 1,000 just based on their kind of core operations. But then you've got, all of a sudden you need to start giving them credit for solving autonomy. And that's worth at least 1,000, I think. And so if the market by the end of the year thinks there's a 50% chance Tesla solves it, then it's like, okay, well, that's got to be at least 500, probably a lot more, I would think. So, But again, what's the probability that those happen and by what timeline? So that's where it's just a really interesting market right now.
Well, I think the one other piece just to drill down on is Gary's assumption, his $1,500 price target does kind of bake in multiples at normal historical average levels. And, I think that's a safe conservative estimate to make, but definitely not one that's guaranteed going into the recession that we're potentially going into. So that's kind of the one area where you might, take that into account and say, okay, in order to make up for that, you need autonomy to have significant traction. You need Bot, you need some of these other intangible, Musk option things to be assigned significant value in the market in order to make up for those. If you're making an investment decision based on the assumption that Tesla will increase in price from here to, maybe in the next 2 years.
Yeah.
Matt, what do you think about the comment that was posted here as well? Feel free to respond to Hans, but also the comment if you don't mind.
Yeah, so somebody posted in the comment that they disagree a little bit because the inflation crisis largely revolves around gasoline prices. And that's actually, I wanted to bring that up too, but I've rambled enough as it is. But gas is at like $6 a gallon. I mean, depending on if you're in California, it's like not, that's a huge deal. I was just talking to my neighbor the other day, and she drives like a Lexus with like premium gas that she has to put in it, and she's like freaking out. She's like, I wanted to go on a vacation and I can't now because like I don't want to fill up my car. And she's like, I should have bought a Tesla a couple of years ago. And I was like, yeah, the same Tesla that I bought in 2020, I think it was, maybe it was 2019. Like now, because of Tesla's demand, it's like $20,000 more just for the Tesla. Now, some of that is higher prices for components, but more of that is just demand outstripping supply. So like, I think what we saw in the coronavirus, crash in 2020 was that it was like an accelerator to disruptive tech. Now that kind of went too far with like Peloton and some of those names getting way too like above their skis in terms of valuation. But I think the overall trend is going to continue. I mean, like pretty much everybody thinks that, EV except for Toyota thinks that EV adoption is going to, increase substantially in the next, decade. And eventually, like that's going to be the answer. Like Drew Dixon, Toyota? The Bear. Gosh, Drew Dixon, the Bear, even said as much. So if that's the case, it's like, well, Tesla's clearly the largest one, and if commodity prices are oil's over $100 and gas is $6, that's just going to create even more incentive for people to start doing the math and say, oh yeah, you know what, maybe the sticker price is higher on Tesla, but the total cost of ownership is actually really great, especially when you consider residual value, especially if ICE car residual value is going to decrease at a point when EV residual values are increasing. Like you start doing that math, and all of a sudden paying an extra $20,000 for an EV is not as crazy as it seems. So I think more and more people are going to start wising up to that and start doing the math.
Just give me my Cybertruck, man. Just give me my Cybertruck. That's all I can say. No, like I've kind of mentioned this in the Discord previously or whatnot, but like FSD with all my gear in the back, say this, go to the customer up in Idaho or whatever. and literally just hash out emails like when that is finally a reality. I mean, that the amount of productivity I could get out of a truck that could just take me to the next location is incredible.
Danny, one of the comments you made yesterday when we were talking in our Discord was kind of fascinating because you kind of mentioned that we were talking about like the topic of Tesla and just for the audience, what part of the U.S. are you? You're in Utah, right? Sort of the Utah area. Okay.
Yep.
Have you seen
we know how to make kids here in Utah. So we're doing our part, Elon. We're doing our part.
You and Matt both. Matt's got like 17 kids or something, bro.
Good job, Matt. Good job.
How many do you have, Danny?
4.
4. Okay.
Yep. All 3 years apart. We didn't plan it that way, but yeah, except for the last one. The last one's 4 years after, but it just kind of works out that way.
That's how my family was. 4 kids, all 3 years apart when I was growing up.
Wow.
Hans, I forgot, Hans, do you have any kids?
No, we don't.
Okay.
Yeah.
Okay.
Got to get cracking, brother. Got to get cracking.
Danny, the question on the so where you're from. So I think Utah. Would you, and maybe this is ignorant of me to say, but would you say that Utah is typically a market where it's pretty heavy on, like, say, the pickup truck, more SUV, and not as much electric vehicle adoption? Is that an accurate statement?
I would say we've probably got a higher percentage of pickup trucks, just because, I mean, literally within 20 minutes of my house, I can be in the mountains.
Okay.
Which is phenomenal. That's why I love Utah. Is I go 2 hours in any direction, and I got any kind of land I want to be, whether it's sand dunes, Lake Powell, the Uintas, like thick forest area, or like Arches National Park. So it's quite attractive on that point. If you like the outdoors, it's definitely the place to be. So there are a lot of pickup trucks. There's a lot of 4-wheel drive enthusiasts around here. But we also, I mean, they've nicknamed like the South Draper area and like Lehigh area at the point of the mountain Silicon Slopes. Like we have Adobe here now. We've got like a mass exodus of tech companies that over the past 10 years have been coming to Utah. So we've got there's a lot of Teslas around too. That's for dang sure.
That was going to be my question. Have you noticed any sort of because when I think about that, like Texas is very similar too. Like Texas, like people love the sort of the outdoors. They love their freaking pickup trucks out here. But one of the things I'm noticing around this area, again, I'm very close to Austin. I'm basically in Austin. I'm Austin Metro. And I don't live in the actual city of Austin, like 30 miles from downtown. But I'm still, in the last 2 years, I've still noticed this very drastic sort of way of how people would traditionally perceive an electric vehicle in this area, I would say, has drastically changed in the last 2 years. Would you say, is that also applicable to your region by any chance? I'm just curious. Like, have you noticed a tone shift around where you live?
Oh, yeah. I would definitely say that. And kind of to your point, the Cybertruck, the ones that have been on the fence about it since the beginning or whatnot, or haven't even considered an electric vehicle, the second that Cybertruck gets here and we actually have ground clearance, like we don't go over a bump, and not to say that Teslas do that, but a lot of the truck guys, that's kind of their perception, is if I can't take this off-road, then I have no business buying the dang thing. But you give us that ground clearance, and especially, I mean, Elon knows what he was doing with the marketing when that came out, and then the ramp comes out of the tailgate and he's pulling in an electric 4-wheeler. Yeah, I was like, where do I sign? Like, hook that up, brother.
That's badass.
But
that's awesome.
The other thing that kind of is fascinating, and maybe a recession would help kind of sell that, is if we do get to FSD, full FSD. One thing that I kept thinking about is, well, you've already FSD and the structure behind it, all the hardware behind it, obviously is built for a car. So we're already building it to where it doesn't take a lot of power. We don't want to consume a lot of power for this chip and this computer to run. So it's already kind of the pioneering stages of putting that that setup in Optimus. And one thought that occurred to me, I was like, well, why don't they just sell Optimus. Obviously, this wouldn't happen for a while, but sell Optimus with like a camera package that you could easily integrate it with like new EVs that maybe aren't even Teslas, and you literally just have Optimus drive you around. You have like a license plate camera, mirror cameras, easily access to power right there to supply the power to the cameras. Have it easily integrate with Optimus, and just have Optimus run FSD and integrate with the cameras that that you install.
So this is literally, just to make sure I get my head wrapped around this. So this is literally like, instead of, so say Tesla already has this self-driving stuff figured out, right? So this is for cars that are non-Teslas, that are not necessarily self-driving, where the bot theoretically would have the same self-driving suite as the Tesla, that it would just literally jump in the driver's seat and then literally drive the car for you. Is that what you're describing?
Correct. Yep.
Okay.
That's
freaking
where
crazy.
that's where my mind goes, is because, you know, like Tesla, they build all that hardware in and it's just not active yet. And then
Yeah.
they send out a software update and boom, now it's active. Now you guys have that capability. A lot of, I would say historically, and somebody correct me if I'm wrong, but I don't see GM, Ford, all these other companies, if they don't need it at this point, or if it's not something that's released, they don't stick it in the vehicle yet. They have all these different trims currently that's what all these different trims are for, is if you want the GPS package or if you want all of that, then you upgrade a different trim. To me, it's like, well, there's an opportunity. It's not like they could just finally figure out FSD and then just send out a software update. They'd have to upgrade the hardware. So it's like, okay, well, license Optimus, sell a camera package with it just so it has the 360 degrees that you could just easily install to any other EV, and that's just one more revenue stream, in my opinion. I know it's out there. I know that's out there.
No, I mean,
but...
I love it. I love it because it's like, is there anything about the laws of physics that would prevent you from doing that, right?
No.
I think the question becomes how much effort does Tesla think that's going to require versus trying to drive the adoption of self-driving through their product line instead, right? So, and in this case would be, so you would want to self-drive, like you would want to self-drive probably majority gas cars in this scenario, right? Because theoretically, the Tesla already has majority, like very large majority EV share, and that's probably going to continue for a while, right? And so within that context, the bot would have to self-drive the gas cars instead, not the EVs, right? So I'm curious, like how much of a sort of appetite there would be for Tesla to want to create technology or like use training data for the bot, because you really have to think about it. It's no longer using cameras on each corner of the car, but now you would have to use data from the sitting position of the bot with it gimbaling around, in a sense, right? Kind of like using the mirrors as well, right? So you have to think about doing
that's
that.
what I mean, is actually integrating cameras, like literally sell Optimus with a package that you install. These days, every mirror has got power.
Oh.
It's like a powered mirror, or there's wires right there that you could easily power a camera with. The license plate, you could easily get power up to it. Just have
so the cameras would feed the bot, and the bot's the input mechanism to the steering wheel.
It's basically it's already got the Tesla technology in it, and you don't have to reintegrate to a bunch of different vendors. The only way I see that happening, though, because you are right, Farzad, I think from an Elon perspective, it's kind of off mission, especially because I was thinking more along the lines of like an EV, like competitor EVs. But if it was looking at it through a lens of full self-driving for safety's sake, and just to get maybe some legislation on board, then I could see them moving forward with it, just to kind of get over the legislation hurdle, just to prove that you can do that and get more data that way. If it's looking at it through a lens of the reason I think that there's a lesser chance of them doing that, especially for gas cars, is kind of against Tesla's mission.
There's a niche market that would be a really interesting place to apply that, and that would just be truck transport. That there's really two large drivers of cost for freight, and that's driver labor and fuel. And with fuel costs rising, that's going to be something you can't really get around with current trucks. But the number of cells that semi is going to take is just so massive. It's going to be quite a while before Tesla can really make a huge dent in the number of electric semis on the road. And so it's one scenario that you could imagine maybe Elon being willing to license either full self-driving packages to semi manufacturers or retrofits, or doing something like you're talking about with an Optimus driver. And I don't know, I mean, they might still get to the point where they have quite a few electric semis before they get an Optimus bot that can do autonomous driving. So it's kind of a chicken and the egg situation, but definitely an area where you might, like, you could reasonably make a case why Tesla would still do it, even though it's a gas-powered vehicle, because you can drive large deflationary pressure on the entire economy by providing cheaper transport costs for all the goods that we buy.
And how many times do we hear how many truck drivers are leaving? Like, we're having a massive plunge in the amount of truck drivers that are on the road these days, from what I hear.
Matt, what do you think?
So, I was thinking about it like from a physics standpoint was the question you brought up, Farzad, and the only downside I can really see is you're going to have a longer kind of latency cycle from when it is made to when the vehicle's actually implementing it. And keeping in mind that like ICE cars are actually slower on accelerating in particular, but probably also on braking because you're not doing the regenerative braking. So I would imagine the safety would be a little bit worse with that kind of like retrofit example, just because you're going to have to add a few milliseconds for each one of these decisions. And then I wonder also the extent to which you need to kind of train the software on different form factors. So this is, I guess I don't know the answer to this question, but like, does it react differently when it's driving like a Model S Plaid that can go like 0 to 60 in 1.9 seconds versus just a rear wheel drive Model 3? I would assume there's probably slight differences in acceleration, and I wonder to what extent it's customized or adjusted for those different models. And so if you start extrapolating that to every single possible model, I don't think that's an insurmountable issue, but you could just have it could require more and more training or kind of different variables that may not be worth it to Tesla. And it seems like it would also be probably maybe not better because there's definitely a benefit to retrofitting existing vehicles. I think that's very clear. But I think selling the FSD system to other manufacturers so that they can have that on their vehicles is a very viable and financially very attractive option as well.
Yeah.
The only reason I thought that may be an option is I don't know. Do you really think Mary Barra is going to want to buy a
absolutely
Tesla?
Not. No way.
You know what I mean?
She said
to the customer. The customer says, "Hey, I've got a GM. I love the GM. Blah blah blah. I've got a Hummer EV. Yay." But hey, I can buy this Optimus package from Tesla and make it work because obviously GM's not going to do it.
Yeah,
in my opinion.
I think what's interesting is when the Model Y, so I'm trying to think. So when Model Y released, we didn't have FSD beta yet on public roads. I don't think. I think it was Navigate on Autopilot, but Navigate on Autopilot came with the car essentially, right? With the Model Y. When the Model 3 and the Model S and X already had it.
Not
the Model Y.
Just regular Autopilot, not Navigate on Autopilot.
Oh, was it? Okay.
Yeah, because Navigate on Autopilot's like the lane changes and stuff like that, and that was not included.
Okay, it wasn't included? Okay. I'm just trying to think, because what I remember is Model Y had some sort of ability to do either autopilot. It had to have been autopilot at that point, but it was a different form factor. So the cameras were placed differently, right? So the angle of the cameras were different. Obviously the acceleration rate, the braking rate, the steering sort of angles it would take were all different. But I feel like that car was capable of doing some sort of assisted drive basically off as soon as it was sold. So I'm curious, like, if the input problem is perhaps not as difficult as it originally, like, as we would think it would be, right? But
Yeah.
I think
It might not be, and I think it may be like a harder and again not insurmountable challenge, but is like now to turn rather than kind of like do direct drive like through the vehicle itself. You're like physically gripping the wheel and turning it, and then like
Right.
Optimus has to figure out how to cross over its hands to do a turn, and like those are not insurmountable problems, but it's really complicated. And I'm very curious just to see what the Optimus kind of like rollout and training looks like, because I have a feeling it's going to be like super specialized for a very long time, like factory workers and like as few degrees of freedom as possible to kind of handle things. And then eventually with Dojo being good and them kind of really expanding that and figuring out frankly how to train Optimus to do complicated tasks, then I think the opportunities for kind of more specialization and broader tasks, like, hey, just hop in this car and drive, like maybe that'll be an issue. But then who's going to have the driver's license? Like, I don't know. There's regulatory concerns and issues as well.
Right.
Well, I agree with that on Optimus. I mean, this obviously that thought would be well down the road of it actually driving anybody. But even I mean, I see, even if at the end of the year here, when we see this prototype, even if all it does literally is come over, grab a box from one pallet, turn over and put it on another one, like literally I'm happy. Like I see Optimus growing like FSD. Starts off really rough, starts off very just very rough, and then step by step it learns a little bit more, more and more updates. Now we add some walking capability to it. And obviously I think they'll have it walking. That was probably just a poor example, but I think it'll just be step by step. They upgrade it slowly, and then before long go Elon speed, and I think we'll be pleasantly surprised how fast it goes once they get it rolling.
Yeah.
Do y'all think? Let's take a quick poll here. Do y'all think that they will show Bot at AI Day 2?
Oh yeah.
I think they'll delay until they have it, if they don't have it on September 30th.
I think Elon already did delay it from what he had it set for a certain date, and then he pushed it back to the end of the month specifically so they could show a prototype, if I understand it right.
Matt, you're also confident that they'll have it?
I don't know about confident, but like I think they'll at least have something now. Like how impressive it will be, I think is definitely up for debate. I think if it can actually walk, like that would, in my mind, like that's an incredibly complicated thing. So for them to do that in like about a year would be an incredible achievement. So like frankly, just that would be great. But if it can do something like some simple sorting task or picking up a crate or something like that, then I think that would really push up my kind of internal time frame of when I think this could be a real product. Steve in the comments says, have Optimus carry a crate labeled not AR-15s. I think that's a great answer. Not a flamethrower, not AR-15s.
Not AR-15s. Yeah, I think if it's already able to your point, Matt, and Danny kind of alluded to this too, like if it's able to just the simple motion of walking and moving around, which is something that Boston Dynamics, who is sort of seen as the right now best-in-class robotics company that has been working at it for a long time to really solve this like mobility problem. If Tesla within a year, they're like, hey, guess what? We figured it out.
And I think
crazy.
How they get there, Farzad, would be really like, because Boston Dynamics is doing like a lot of like hard manual programming, right? But if Tesla just says, hey, like we leverage our existing AI infrastructure and the thing couldn't even like get up on its knees at first, and we just like, fed it all the data on the ways that it failed. And eventually the AI system taught itself how to walk and how to pick up a box after just failing and figuring it out. Like if that's the story, like to me, that's really, really
bigger.
important.
That's
big.
much
Yeah.
bigger.
And the mechanics of walking are so well understood that it's not something that they have to have a physical prototype to do the training with. That is totally simulatable, and they can teach the AI algorithm to do that. They just have to have a good understanding of the actual, electromechanical dynamics of the servos and all the pieces of their specific bot implementation that they can plug in as inputs to that algorithm. But yeah, they can totally teach an AI algorithm how to do the walking, and then get it running on whatever hardware that they're able to put together. So I would not be at all surprised to see something that is not a hard coded. It actually is some sort of a neural net architecture that is running a walking algorithm when they show the prototype.
There's a comment here from Real Talk. Tesla factories are full of robotics. Optimus is at least level 3 already. Hardware is not important this coming AI day. It's AI, and command software is walk, no, think. What do you guys think about that?
Yeah, to me,
Boom.
I guess walking is the first step of think. So like I agree with the way that this question is phrased, but like if the think gets to walk, and then there's a path forward very, very quickly where think can go from like, doing dexterous things. Like if Optimus could ever like sew something, to me that would be like, oh my gosh, like the hardware is fantastic and the AI is like phenomenal. I don't think it'll be anywhere close to that, to be clear, but like some example of being able to like do something, that requires some amount of dexterity, and then from there, like the path forward to doing more complicated sorting or working tasks. I think, like, I agree. It's thinking, but how much is that implemented?
Yeah, I would expect it to definitely have some of that, just understanding how all of the FSD project came out of AI that they had already implemented in the factories. Joe just is talking about how, what did they call it? The bamboo line, where they had created neural net architecture in the cars to put every car through all of the battery of safety testing that needed to be done, so each car could be qualified individually. So this has been going back a long time that they've been doing this in the factory. And so they've got a lot of experience and a lot of projects under their belt of using AI to think and do tasks that were previously done by people. And so now they're taking that and they're packaging it up and they're putting it inside of an Optimus container. So yeah, I would expect there definitely to be some thinking demonstrated. I don't think that the general public really appreciates how deeply this has been implemented already, and that for them to add this into what they're doing in their new work is pretty straightforward.
There's an interesting comment here. If Elon shows a bot that works but looks more crude than the sleek dancing bot they showed, media will FUD it and say Tesla's selling vaporware. They will downplay it somehow, I'm certain. And so I think this is interesting because like we're just talking about how impressive it would be, especially with Matt's point, how they got to the basic movement aspect of it is really the true story here. But if it doesn't somehow impress, quote unquote, like it does just crude movements and it doesn't say do an active factory job or an active warehouse job or something, that it could impact the long-term potential of the stock theoretically. I don't know if that's the case, but do you all think that this could actually be a risk, or is it not a risk because no one's pricing it in the stock? Like, how do you guys think about that?
I think it definitely will not be well appreciated by the media. I mean, just linearly extrapolate every single Tesla event that's ever happened, and you end up at that conclusion. I always expected massive things to happen in the stock market and the media when we saw Battery Day and AI Day and all these events in the past. And, every time it's just like crickets. Even, Cybertruck reveal, how it was just massively hated on. I don't think it matters what they show. There's going to be so much pushback against it. I mean, it could be beautiful, and I think it would still be hated on by.
I think that thing could do a freaking cartwheel, and they would still have some reason to throw hate, like the media throw hate its way. Like, honestly, I think and Wall Street. I mean, Tesla's a car manufacturer, guys. Remember, they're a car manufacturer. That's all they do. So, that seems to be the narrative.
But Toyota makes robots, and Boston Dynamics has already done this before. So, it's nothing. It's a nothing burger. And at the same time, it's never possible. They will never be able to do it.
Yeah.
I think Elon had a tweet recently to that exact effect. It's like, we get this pushback that it's simultaneously already been done before and impossible and never going to be done.
Yeah. I'm just curious, like I think where the if we sort of like relate this back to the stock price, like where the stock is going to be at AI Day is also going to influence how the stock, obviously how the stock's going to operate. If it somehow rebounds from here and Q2 turns out to be an amazing quarter, or it severely beats expectations and we're on a run up back to all-time highs, then I think within that context, say by September 30th, if it's sort of on the way upwards towards that level, it could be at nothing burger, regardless of what they show. It could cure cancer in front of our eyes with its fucking fake. Oh, excuse me. Wow, I just cursed. My apologies. But
are you human? Oh no.
I think, I don't know. But I think it's highly dependent on where we are, and I think with the recessionary fears that are going on, if we really do end up in a really bad economic environment, who knows? I mean, within the context of that, but I think longer term is what's more important, right? Go ahead, Matt.
The thing that I could like, to your point about no matter what it does, no matter like how crude it is, like if it's crude, the media's gonna say, oh, like Tesla is a joke and like they clearly don't have this. If it's like reasonably good, kind of like what we're expecting, it'll be like, all right, well, they're years away from this being anything. If it's like amazing and it can like already do a Tesla factory job, which to be clear, I'm not expecting, like you're going to have the AOCs and the Bernie Sanders of the world talking about how Tesla's trying to kill the American worker. So I think no matter what they do, there's going to be this horrible narrative out there. And so like, I really don't expect this is going to be a catalyst kind of like in the near term, because they're just like a FUD magnet. No matter like how bad or how good the product is, it doesn't matter. It's like there's always a different attack vector out there. But I'm curious, Farz, I don't know that you answered the question, but what are kind of your expectations for like the bot and how good it's going to be?
Yeah, I think so. In my head, I don't think Tesla would show the bot unless it's doing something that's different from every other bot. Because that's how usually they do their product reveals, right? Is they're offering a product that's doing something that is, in a sense, revolutionary for that field, or way more advanced than any other application, right? Cybertruck, freaking bulletproof steel, and freaking glass that breaks when you throw a freaking steel ball at it, right? So it's like, or whatever, but it's got adaptive suspension, and it's got a freaking ramp that comes out. It's got 0 to 60 in 2.9. It's got 500 miles of battery, and the list kind of goes on. It's a very unique product for its category. Model X was, Model Y, so on and so forth. So within that context, I think the bot at this point, if they're going to show it, it has to be somehow significantly more advanced than its competition, right? So what's its closest competition? In my head, I'm not a robotics expert, but in my head, it's something like a Boston Dynamics. And a Boston Dynamics, what it does, it's hard-coded code that says, do this dance routine, okay? So in my opinion, I think what Tesla's going to show, and I agree with the sentiment that they will show a bot because they wouldn't have delayed it unless they were going to show a bot. So I agree 100% with that statement. They're going to show a bot that's going to do something like interpret spoken language for what it is, and then execute on that spoken language. And the example I've used in the past is, in a warehouse application, one of the things that is repetitious and boring, and honestly dangerous because it can cause injuries, is moving freight or parcel from one side of the warehouse where the outbound floor has finished packaging, or close to the dock doors, over to the dock doors and into the trailers for the trailer to take it to its destination, right? So you can use a pallet jack for a lot of that, but sometimes you have a small parcel and you have to sort through it. You have to sort potentially your express stuff to your ground and your ground stuff, right? So something along the lines of, Optimus, please sort parcel and drop off at correct dock doors, right? So like spoken language. And if they're able to showcase that, hey, we've trained this bot in this way so that it learns how to interpret your spoken language and then execute against that task in a work environment, it has to be something close to that, in my opinion, for it to actually be a Tesla event. So that's how I think about it. So I think they're going to use it in a real world application. They're going to describe how they've trained the bot to get there, and how that training, to your point, Matt, is really the key factor here that is going to allow it to execute in real world settings. And there was something else. There was a comment that somebody mentioned as well in here, which I'll put up here in a second. If you just give me 4 seconds. Somebody mentioned basically, if you take it within the context of, if this bot learns this, okay, like someone's bot learns this specific task, you can just beam this thing to all the bots across the world. And if one bot in a warehouse somewhere learns how to move product from one place to the other, then all bots are going to learn how to do that from one place to the other, right? And I can't find the comment, and I do apologize. I wanted to give credit to the person, but
I couldn't agree more with that comment. I mean, it goes. I mean, that's what they're currently doing with Teslas. Once they've ironed out the kinks or whatnot, it just releases it to all the Teslas. Maybe not all at once like that. Maybe it's in phases. It seems like, but very quickly will it pick it up.
Got it. Yeah. Or let's think about what would Jeff do, or what would Jeff Who do? If I teach my bot a complex task that no one has taught their bot to do yet, will Tesla Dojo learn that and teach every other bot that ask automatically? So you're almost crowdsourcing. You're crowdsourcing the fleet's abilities and sharing it across the entire, really across the entire fleet. So if somebody teaches their bot how to fold laundry, now everybody knows how to fold laundry. If everybody has learned how to cook, now if one bot has learned how to cook, now everybody knows how to cook. I think if they showcase that and somehow do a simple example of that at that event, then I think that to me feels like a Tesla event. That is like that's what I would assume they would show based on their previous track record. But I could be wrong. I don't know how you guys feel about that. If it's too sort of like pie in the sky, but that's my thought.
I kind of think like with their recruiting events, they really try to like hit people who know these details like over the head with how great they are. So it wouldn't surprise me if there's like some guy we've never heard of who gives like a 45-minute speech on like their innovations in actuators over the last couple of years, right? And like just like how like amazing and energy efficient and dexterous that they are. And then like there's somebody else on like the material science side, and then somebody else on like stitching it all together and sensors and like the stuff that they're doing to incorporate like audio, because right now FSD is all like visual inputs and learning, right? So like I think one important thing for the bot's going to be how do you incorporate audio learning. So I think there's going to be like a lot of like nitty gritty details, as much as we like to kind of think about like the big picture of what does it mean. The real history of Tesla events is they go like way deep on the details.
Super
so
dorky.
I think there's going to be a lot of that too.
Yeah.
And I'll totally be nerding out with him. I can't wait.
I know some of these words. Yay.
Yay!
I know robot. That's about it. Yeah, it's fascinating to think about. It really is.
What?
Yeah, go ahead.
No, I was just going to say, and I mean, and maybe this is a subject for another time or whatnot, but it kind of made me think that, yeah, even if this thing is doing cartwheels, even if this thing, obviously it's probably not, but one way or another, like I think Farz even made a video about it, that if we do get an amazing robot and we do start seeing, I mean, I personally don't think we'll see it outside of Tesla for a few years at least, honestly. But even it being inside of Tesla, I mean, that certainly helps with, I would say, how like their product output. But there comes a time where, I mean, if this thing is incredibly helpful and it can help contribute to the economy, I think Farzad is right that it's a whole other conversation we need to start having about, because if we do have this thing start driving trucks and we do have this thing start laboring in the fields and everything, I can only imagine the FUD coming from that.
Yeah, that's exactly right. Yeah, I think and I think Matt sort of alluded to this too, is like if AOC and Bernie start taking and that sort of that camp of politics, that they take the camp of this thing's coming to take your jobs. Yeah, that's going to be an interesting discussion. That's going to rile up a lot of people, and especially especially in a recessionary environment.
Yeah,
right?
Yep.
Because
true.
what are businesses going to do? They're going to look for the lowest cost possible to survive. And if they can somehow say the bot actually starts working in 2023 and we're in a deep recession and there's companies lining up to use it for their applications and it costs pennies on the dollars versus regular labor, like what then? And at that point it's like, okay, like that's how much of that is actually a valid point at that point? If you get in a recessionary environment where all these companies are actually getting rid of labor because they have to survive, and then the bot comes to fruition as a potential variable or a potential tool for them to use down the road, and they start getting into the lists with the intent of not having to hire manual labor for that job, then those people that could lose their jobs in the next year theoretically could be out of work for probably forever. Who knows, right? So how much of that is real and how much of that is not? It seems like it's all coalescing. Like all the things are starting to come together in very positive ways, but also in very negative ways. And it seems like 2023 is going to be like everything is going to come together. And again, I don't know if I'm thinking crazy about this, but it just seems like something is lining up. The robotaxi angle is extremely positive. Where Tesla's going to offer everyone super cheap transportation, but on the other side, they're going to be like, yeah, but they're going to take your jobs. I don't know. It's weird. It's a weird time.
But I mean, what does that do
yeah.
for the economy? Like the economy on an enormous scale. I mean, I can't remember exactly what Elon was saying, but I mean that largely got ignored, I think, in a few of the last calls that he's done. Is what does that mean for, like, what is the economy at that point once we have Tesla bot going around?
Exactly right. Real quick, I just want to address this comment. So you're saying that we're going to be in a deep recession. How long? What happens to the stock? That's not what I'm saying. I'm saying within the context of that potentially happening, you could have a lot of variables that are going to drive the discussion towards very positive routes and very negative routes. So I'm not saying a recession is going to happen. I'm just role playing that if it were to happen, expect those kinds of variables potentially. So just want to make sure I'm clear there. Not investment advice. None of this is investment advice, by the way. I should have said that at the beginning. Everyone's on the hook now. Hans, you wanna kick us off with your topic? I know that there was a couple that you wanted to touch, but go ahead and do that for us. I'm gonna step away for 4 seconds, but I can still hear you. So just go ahead and kick us off if you don't mind.
Well, we really already talked about the main topic that I wanted to discuss. It's kind of what we launched into. It's just really wanting to think through what are the potential bear case scenarios that we should be on the lookout for, with being terrible macro environment, having potentially stalled progress on FSD, potentially stalled progress on Optimus, and then also the one that I didn't mention earlier was key man risk with Elon. I don't think that any of those things are highly likely, and I definitely don't think that all three of them together are likely at all. And I think, I guess the counter argument to that, and I really would love to get your take on this, Matt, is if we really are in a recessionary environment and we do see progress being made on the FSD front, Optimus front, that what do you think the likelihood is that Tesla will be viewed as a flight to safety from an awful macro environment, and that it will kind of turn into a replay of the 2020 V-shaped recovery in tech, but maybe be more localized to companies that have a lot more traction like Tesla?
Yeah, I mean, I think I want to say I think that's starting to happen, but I don't think that's actually true. I think that's just wishful thinking on my part. But I was doing some digging onto this topic the other day because I was looking at utility stocks. I used to work for a utility company, and I was on their non-regulated side. But utility stocks are kind of viewed as the ultimate kind of like safety asset. But like these utility stocks right now are trading at PEs of between like 25 and 30. And you got to keep in mind that they are restricted from growing. So they can't really grow more than about 7% per year because they're regulated. And if they grow more than that, then they have to basically give those earnings back to customers, back to ratepayers. Mm-hmm. So like you look at the PEG ratio on that and you're like, okay, well, those PEG ratios are like, 3.5 to 4, which is crazy. Like you should not be paying that much for quote unquote safety. So like the traditional safe assets in my mind are way overvalued. And people look at Tesla and they say, okay, well, it's volatile, so it must be risky. But I would say the quality of Tesla's earnings and their ability to sustain those, and more importantly, to kind of grow those in the future, in my mind, that's like the definition of safety. So like, would you rather, like Tesla right now is trading at a PEG of a little over 1. And so in my mind, I'm like, would you rather buy Tesla at a PEG of, a little over 1, with whatever uncertainty and whatever opportunities you see, or would you rather buy a utility company which sells electricity at like 3 times the PEG ratio of Tesla, when they're selling a product that is like 3 times to 4 times the cost of like residential photovoltaic rooftop PV? And so like I think the whole market is just not thinking about risk and reward right at the moment. I mean, I talked about this a little bit in some of our Good Soil investment live streams too, where like you've got like all of like the terrible SPACs out there have fallen like 80%, but like a lot of amazing companies out there have fallen 80% too. And so I think the market's just done a terrible job so far of kind of like differentiating, which companies are truly like valuable and winners in the long run. So maybe a bit of a long-winded answer, but I think, in my mind anyways, and of course I could be wrong, and the market could do things that, I think doesn't make sense. But I think with Tesla's earnings, I mean, presuming they kind of continue to post, reasonable earnings growth going forward for the next couple of quarters, even using Wall Street's estimates, which I think are really way too low. But they've got like $18 for 2023. But if you just assume they hit those numbers, which is kind of like a bear case for me, like, well, how low can the PE really be? And so then you can kind of come up with like a floor of like, well, if the stock really isn't reacting based on how macro is, then I think you do the argument for kind of flight to safety gets stronger and stronger.
Danny, any thoughts?
Nah, not at the moment.
Okay. Yeah, I think the one thing that I keep getting stuck on with like the flight to safety angle, I think Matt nailed it. There was actually, I wanted to kind of confirm this with you, Matt. So I shared something on the screen. So I just typed utilities in Yahoo. And this is one. This is a company that has. So it's in the utility sector. Next Extra Energy. I don't know if you're familiar with them. They have a market cap.
They're pretty unregulated actually. So like what would be a good one? Like CMS Energy would be a good one, or Southern Company. CMS. Southern Company's right there, close to the top.
Oh, sorry. Should we look at Southern instead?
This will work. It doesn't matter. They should be both similar. I mean, these.
Okay. Do you want me to go like statistics, for example?
So yeah, if you look at statistics, so like forward PE 34. Look at that. Up at the top, it was.
Sorry. Right here.
Yeah, forward PE 34, PEG ratio 3.59. That's crazy for a freaking utility. Like Tesla, what's Tesla's? If you do those right now. Tesla's,
so let me actually duplicate
PE
this.
Is going to be a little bit higher, and their PEG's going to be way lower.
That's insane.
Wow.
Yeah. So to me, this is like that does not make any sense at all. Like, and
wow.
So how long can this persist? I don't know, but kind of what I keep thinking is, and I alluded to this at the top of the conversation. But like this huge fall that we've seen in Tesla, like it's all been on the back of essentially no operating news from the company. So they had this amazing Q1 report, and then the stock just like crumbled due to macro after that. So how many quarters of kind of posting good results is it going to take before the market says, oh, you know what, like sure, macro is bad, but Tesla seems to be okay. I think it may just take some time.
Real quick question on that.
Does operate. Yeah.
Real quick question on that. So is the 3.59 PEG ratio for Southern, is that more a function of them being overvalued, or is that a function of Tesla being undervalued? So is a forward PE of 20 for Southern like a realistic PE for that type of company, as an example?
Well, I mean, I kind of think all the utility stocks are a little bit overvalued, and I'm certainly biased in that regard. But like, finance theory would tell you that like companies should tend towards a PE of 1. And so the fact that like if you looked at that chart that you had up there, going back several years, they had PEG ratios over 3. So what that tells you is that like these safe assets, these dividend yielding assets are, there's probably too much capital kind of concentrating on those because they're safe, they're well known, they're super easy to analyze. Like, this is really basic stuff. And people kind of, I've spoke to some of our investors when I was, with our company, and like about some of the kind of systemic risks that I saw that could like ultimately kill these companies. And they're like, I kind of think that's not going to happen. And, really just don't touch our dividend is like the extent that they think about this stuff. And it's just like, it's so like short-term wrong thinking. But they're the ones who appoint the CEOs, and they're the ones who, make all the kind of approve all the large investing and strategy decisions of the company. And so I think you just got this situation where like people doing this business are super comfortable. They know the business. It's worked for the last 120 years. So surely by the time I retire 10 years from now, then it should be fine. Like, I don't think the system will implode. And even if it does, like, I'll get 5 years and a nice bonus, like when the company falls apart. But really, for the most part, they just don't think that it's possible that these businesses will fall apart. And I just think that couldn't be further from the truth.
That was a very eye-opening stat you just shared. Before we even go back to that, so Emma Pepper's in the house. Emma Peppers, if you don't know, Good Soil partner. Matt's a counterpart on Good Soil. Keep up the good chat, brainstorm. Great to listen to a good live stream like this while I'm doing other things instead of Bloomberg CNBC on background. What's CNBC anyway? Anybody know what that is?
Just CNBS.
CNBS.
Yeah. And Stephen Mark Ryan's accent also.
Yeah.
I have a terrible Australian accent.
Hans, is your Australian accent any good?
It's not good, but CNBS.
That's pretty good.
That's better than I did. Yeah. That's
all
good.
right. It's better than anything I could muster. Welcome, Emmett. We'll have to have you on one of these at some point in the future if you're up for it, my friend. We love having. Matt, you've been a freaking incredible addition to this forum, by the way. You've been incredibly insightful. So thank you for joining us today. Let me go back to that one thing. So if we go back to the thing that Matt was talking about, yeah. So like the PEG ratio on the utility company, Southern Company. So this is historical. So this is 3/31/21. So as of March 31st, 2021, their PEG ratio was 3.37. Then as we come towards the present, 6th June 30th, 3.77, 3.35, 3.52, 3.25, to current 3.59. So they've been in this range of sort of 3.5. So at least for the last, call it, year and 3 months or so, the market has been comfortable giving them a price that correlates to that PEG ratio, right? Mm-hmm. So is that a good way of interpreting it, Matt? Is that a proper way of thinking about it? Okay.
Yeah, and they're just like a couple dollars off their all-time high. Meanwhile, if you're familiar with it, like Southern Company in particular, they have built these like total boondoggle plants in South Carolina and Georgia, I think it is, where like they tried to do like a clean coal plant and then like a nuclear plant. And it was like, it's gone billions of dollars over budget, and they're just charging their customers these fees, like huge exorbitant fees for power plants that are just under construction and have not actually been built yet. And it's like, okay, well, we don't really care about how you actually perform as a company. The dividends have been great. So let's flow here.
Yeah. It's just, I have a question on that, Matt.
Yeah.
So one of the things that Peter Zeihan does kind of harp on is just demographic changes. And so I'm curious how much this has an impact on things. That is, the boomers, they have been in this era of approaching retirement where they have the most discretionary money to be able to invest. And then as the market was going crazy, they kind of a lot of boomer money sloshing around. But then as they actually pass retirement, all that stuff that they were assigning to speculation, they're rotating that into income. And they're doing a flight to safety. So do you think that's part of what it is that we're seeing kind of just on top of all the macro, or how much of a factor is that in, something, dividends would be a great example. Like we just want our 4%, 5%, whatever dividends we can get. We care about that a whole lot more than really looking into the fundamentals of the company and whether or not it's working because it looks good to, my retirement portfolio.
Yeah, I mean, I think that could be part of it. My sense is it's probably overshadowed by macro. I mean, for example, as you get closer to retirement, or especially once you're in retirement, like traditional kind of portfolio management theory will tell you want to have a lot more in fixed income rather than equities. But the bond market has been absolutely trashed, year to date. So that to me is maybe an indication that while the trend that you're talking about, I do believe is probably playing out. I think it's probably playing out something in slow motion, over like a decade or two, that kind of trend may take place. But yeah, I think that the bigger things are just what's going on in macro with interest rates and inflation.
How do you guys think about key man risk? That was one of the topics that I know Hans was talking about, sort of in the context of one of the bear factors. How do you think about key man risk in this, as it pertains to Tesla? Anybody want to take a stab at it?
I've been blabbing too much. Someone else.
Yeah,
go for it.
I think the one thing that's interesting about key man risk is that the longer Elon Musk is at the company, the less that risk becomes, right? So I think the question becomes like, is today, if Elon were to leave right now, was there going to be a big impact to Tesla? I think, like, because of the recent thing that happened with him announcing the layoffs at the company, as an example, like the 10% salaried, the fact that it had to come from Elon was a little bit of like, okay, he's still kind of needed to ensure that the culture exists, right? So that to me says that having Elon at the company to this day is still important, because we don't really know who's that person that's going to come forward that says, hey, like everybody, we shouldn't have allowed this to happen. At the point it's like, hey, everybody needs to get back to work. Oh, like it looks like we have too many people. We need to let go of 10% of the company, the salary workers, which, to remind people, is a standard operating procedure for really any company in reality. And Tesla is no stranger to this, and they've done it before. So to me, what that tells me is that Tesla still has a little bit of a key man risk with Elon, because of that culture aspect, which in my opinion is Tesla's most important competitive advantage. Forget the batteries, forget the drivetrain, it's culture. And we've talked about that quite a bit on this channel. Yeah. But that's how I think about it. But 2 years from now, 3 years from now, I think that key man risk comes down dramatically as the company continues to grow. And hopefully, this last thing that happened with the, Elon calling everybody back to work was an important reminder to the leadership group that says, like, let's not get lazy here. Let's not get complacent. And I think the COVID transition was also something that was very impactful to that, because it's human nature to sort of like kind of sit on your laurels if you're going to have more of a cushy environment, like working remotely quite a bit. Even if you work at Tesla, like if a percentage of your workforce is not coming to work, and they have their dog sitting on their lap while they're working, or working, that's still going to be you're going to see yourself falling into that sort of like comfort. You have to be in the fire to really feel like you're working at Tesla. But this reminder is a good thing. I think it, again, resets the stage for everybody else that says, hey, like, we still work at Tesla, don't forget. But yeah, I do wonder, like, at this year's investor meeting, I think it's July, August, I forget what the date is. I think it's August.
Yeah.
Like, who's going to ask the key man risk question? Is that question going to be asked at that specific meeting? And what kind of answer will Elon have to that? And I'm going to guess it's going to be pretty standard. It's going to be like, because he can't offer an answer either way. If he says that, yes, we have somebody identified, it implies that he's going to leave soon. If he says, no, we don't have anybody identified, it implies that there's key man risk, right? So it's like he's kind of stuck between a rock and a hard place. But that's how I think about it. And I don't know if you guys have any thoughts on top of that, but that's where my head goes. I don't know if,
Yeah, for me, the part of the key man risk that makes me concerned is I think he's built an incredible culture so far, but I think he really is like a once in a millennia personality in his ability to operate. I mean, we've seen how, and it's been talked about and described by so many different people, how flat all the organizations are. That flatness is only possible when you have Elon at the top, and his ability to be that flat and that wide is completely unique and completely unparalleled. And, he's got so many rock star people on his team, but none of them, Gwen Shotwell cannot run 4 major companies going on a 5th all at the same time. And she's awesome. She's incredible. Like, she's probably world class, but she couldn't do what Elon is doing. And, the same can be said about Drew Baglino or Zachary Kirkhorn. Like, all these people are incredible. But he's just, unparalleled in his ability to just create this mental model of all of these different organizations and then be able to fully traverse the depth of the company and the width of the company. And so I think it definitely, that raises the question in my mind, okay, how do we maintain those cultures? How do we maintain the effectiveness of those organizations? And, so much of their competitive advantage is in how flat they do operate. And so if we lose our ability to be that flat, what does that hold for the future? And I think they all have an incredible runway. And even without Elon, an incredible ability to execute and change the world. But is it the same as it is with Elon at the top? I don't think so.
Yeah. Danny, Matt, any thoughts on that?
Yeah, I just want him to stay healthy for sure. And I mean, it is incredible what he does do. I mean, the guy goes where the biggest bottleneck of any of those companies are, and then he sleeps there, takes care of it, works with the people. That's one thing that, I mean, if you would have told me 10 years ago that I would even be stupid enough to start my own company and all of that, I would have told you you're freaking nuts. Like, I've just been, I've always been the guy working with my hands and right in the middle of it. And that's what finally got me to do it, was just like, all right, I'm sick of constantly knowing like this is the direction that we should go. Here's like, we've got all the engineers saying this is the way we need to go. We report it and why it makes sense. Even the return on investment makes sense. And then nothing. So it's like, well, I mean, you can call me whatever the heck you want to be, but I'll be right there fighting with you. And that's what I love about Elon is he's very much leading from the front. And if that doesn't inspire the culture around him, I don't know what does.
Yeah.
Yeah, and I would just add, like, he's seems to be increasing the rate at which he's making enemies, which makes me a little bit concerned. I mean, the stuff that he's done in Ukraine is incredibly remarkable with deploying Starlink, and it's absolutely made a difference. But like, that can't have increased his life expectancy, I think, by making enemies with the Kremlin. A lot of people have been known to have health incidents after making enemies with Putin, so that's not necessarily great news from that standpoint. But I think, I mean, Hans, you were saying it before, just like the work ethic and like the sleeping on the factory floor, like that's the stuff that is just so remarkable. And we had a couple of Rivian Bulls on our channel kind of talking about like, oh, they've got minus 500% gross margins. Like, what do you think? Like, is RJ Scaringe going to get out there and get on the floor? And they're like, these are big bowls for Rivian, and they're like, nah, he's probably a little too bougie to do that. And I'm like, I don't think you want to be investing in a company where it's like you like the CEO, but you think they're too bougie to like kick it out there with the factory workers. Like, it's just, I don't know. He is such a unique talent, and I agree with what you said, Farzad. Though, like I'd be much more worried about Elon like leaving or dying or whatever like 3-4 years ago than I am now. I think the company has reached the scale where it's Tesla's going to do fine, kind of no matter what. I mean, the leak we saw last night, I think it was about Master Plan Part 3, is essentially all about just scaling. Yeah. In my mind, if Drew Baglino had to be the guy who kind of leads the scaling effort, Electrek had like some leaked internal team meeting where Elon was talking, and
I didn't see this. Let me pull this up.
He said that the Master Plan Part 3, which we've heard about for a while, is all about scale, like achieving ridiculous scale or something like that.
We know that Farzad's behind on his Rob Mauer.
Behind my, like, is that who brought it to light?
He definitely talked about it last night.
Okay, yeah.
I missed that one too, actually.
Rob's the man. Shout out Rob. Oh, by the way, I also want to do a shout out Yashu. Juju Gang's here. Yashu from Hit That Bid. Where's your comment, bro? There we go. So we got Yashu in the house. Welcome, my friend. Juju Gang, if there's any Juju Gang in the house. What's up, what's up? So this is I guess, Master Plan Part 3 is all about achieving very large scale. In order to shift the entire energy infrastructure and transport infrastructure of Earth, there has to be a very high scale. We have to ask, what is the actual tonnage? If we work backwards, and let's just say 300 terawatts. Okay, so I guess was this... that's what Master Plan 3 is all about. How do you get enough scale to actually shift the entire energy infrastructure of Earth? Okay. Is this kind of what you were alluding to?
That's very bullish on Tesla energy. It seems like most people think that Tesla ignores. I mean, they're building it, but they don't focus too much on solar and battery packs and all of that. But I would see that as a natural progression as they have more scale on their vehicles and bring the demand down a little bit. Sorry, Matt, I didn't mean to cut you off there.
No, that's fine. It was you're right though, Danny. It is very bullish for Tesla energy, and I'm not worried about energy. I've always viewed it as like a 2030 and beyond. Really, that's when it's going to be meaningful. But I'm super excited for it. But to my point before we brought that up though, Farzad, it was like this isn't like figure out how to make cars like it was with the Model 3 ramp, where like the company almost went bankrupt, and it was like they didn't really know how to do it. So, if Elon does move on or shifts his attention to SpaceX more with trying to get people on Mars, which I think to some extent is reasonable for us to expect over the next decade, I do think like Drew Baglino could be the guy who kind of comes in and says, all right, we have like our playbook of how to build gigafactories. There's certainly stuff we need to figure out on the energy side of how to scale more efficiently and productively or whatever. But I think the skill sets needed to scale an existing system is a lot different from like the moonshots that need to be created out of thin air, which is like what Elon specializes in. So I think, the time may be right in the next 5-10 years for him to move on, and it wouldn't necessarily surprise me if that happens.
Got it.
And I think it is
Oh, go ahead, Hans. Sorry.
I was going to say, I think it is a direct answer to, one of the risks in deglobalization is just as you disrupt supply chains and you disrupt energy and food sources, if countries can't keep the lights on, that's a huge deal. And so the more that Elon can drive scale in their ability to help countries become independent in their own energy production and storage and ability to keep the lights on for their citizens, then that is incredibly important. So, going back to, they can use that as an existential threat to really drive massive progress and massive growth in the company right there in that area as well.
Great points. 10 minutes left until we hit the 2-hour mark. Are you all comfortable with a little bit of Q&A from the chat? You guys cool with that?
Do it.
Yeah? Let's involve our folks. I
like I
posted
said in the first
message.
one, like I said in the first one, brother, man, I'm here as long as you need me, brother.
I love it. You guys are awesome, man. By the way, everybody who's been watching this so far, thank you so much for the comments, how active you guys have been with the thing. This is our first time live streaming this sort of format with the Farz and Friends, I guess we're calling it. That was Kuba's idea. It was one of our Discord members, channel members, and I loved it, and we ran with it. And if you're freaked out by the thumbnail, I know we're too sexy, so that's okay. You understand.
Get ready to do
I
it.
was just looking for my hair. That's all I was doing. I was like, where'd it go? Where'd it go?
Yeah, we did get the backstory that this is Farzad's sexy pose, though. I think that was when we were on live.
Nice.
It was my sexy pose.
No
It
wonder
was my
I was
attempted
trying
sexy
to
pose.
channel that for myself.
Yeah, I don't have any of it, so you guys did it way better than I did. I'll tell you that right now. Let's go with the first question here in the chat. Thank you all for your questions. Do you think a deep recession would help Arcimoto, which sells more affordable EVs? Any of you guys have any thoughts on that? I'm not familiar with the company, so I don't know if I can answer this question, but any of you guys have any thoughts?
I know
heard
of them.
Arcimoto.
Arcimoto makes those like I think they're 3-wheeled, maybe they're 4-wheeled. It's kind of like a slightly cooler golf cart. You know, it's like enough to like get your groceries and go back. It's like, you know, kind of like a stripped down car. To me, it seems like it could be, but I just don't really see that form factor taking off. I think Arcimoto, from what I've heard, the CEO's an impressive dude, so it wouldn't surprise me if they're successful. But I don't think that's going to be like, you know, even 5% of the market anytime soon.
Yeah, they definitely have some challenges ahead of them. I've got a small position, been following them for a while, and scale is the big one. They definitely have not hit yet the point where they're ramping up mass production. So they've got to be able to figure out how to do that, and then doing that in a recessionary environment will be difficult. And you know, trying to ramp up production means that they need lots more batteries. And so trying to acquire battery supply in an environment where, you know, Tesla and all the other automakers are eating up battery supply is going to be a challenge. That's not to say that they can't do it. I do think that the recession would lead consumers to consider that change of form factor at a higher degree. And especially their MLM concept looks really interesting. I think you might see that being something that they could make pretty decent money selling quite a few of. But yeah, that requires that they do what Elon keeps telling us is the hardest thing to do, and that's scaling production. So possibility, but lots of huge risks ahead for Arcimoto still.
Yeah, I mean, if I saw that if the price tag was correct, $18,000 for that sort of vehicle, I don't know, man. That's like, you can buy a used car that's has a lot more utility than that for, say, even if it's a beater, you know, like a piece of crap 1999 Honda Civic, you know. I think it's going to give you far more utility at a much lower cost in case of a recession. Like, this is more of a, I'm not so sure this is going to be a recession play. But again, I don't know enough about the company, so
that won't fly in Michigan. I'll say that much. You can't have that in 10-degree weather. So it's going to be limited use cases.
The other thing that struck me was what's the safety rating on those? I mean, don't get me wrong, I'm all about like four-wheelers and all that good stuff, but it looks like those are meant for the road and everything like that. But I would imagine, you definitely can't put your family in one of those. just saying.
Sorry, I saw Yashu's comment. I had to post it. You're welcome, Earth. Yashu, you're too kind, my friend. Next question. Should Elon separate his tweets between personal and business sites? What do y'all think?
Hell no. I find it honestly. There's a lot of Twitter, a lot of tweets from Elon that are just hilarious. I don't know. Me personally, I like it just the way it is. That's my 2 cents.
I kind of see it as a moot point. I mean, he's going to do what he's going to do, and obviously, there's not anyone else who's going to convince him otherwise.
Elon will Elon.
Yeah, completely agree. I was thinking the exact same thing. It's a moot point. It's like, maybe he should have some more self-restraint, but he's not going to. So, oh well.
Yeah, I'm aligned. Great question. BYD is doing well. Should we be concerned?
No.
Mary
That's a
Barr
good
should be
thing
concerned.
because apparently we're getting Tesla's buying some batteries from BYD. So good for BYD. Give us
Tesla
those
said
batteries.
they were not aware of whatever that news was. Did you see that?
Oh,
Tesla's
really?
China came
Really?
out and said, "Don't know what you're talking about, BYD. We don't have any
Oh,
agreement."
interesting. Interesting.
So they basically they debunked it.
Yeah, I don't know. I saw that on Twitter somewhere, so it's possible I just saw some fake tweet about that. But my understanding was that whatever the comment from that BYD CEO or executive, Tesla China came out and said, "We're not aware of any plans to buy EV or batteries from BYD."
Interesting. I mean, it did kind of strike me as strange, especially Tesla's building the cathode plant down there in Austin. And I mean, it seems like they're making some significant headway on battery production themselves. And me personally, I just see that increasing. They'll be scaling their battery production like crazy over the next few years.
Oh, I just got a link here. Thank you.
Gaurav, I think it's important to just go back and remember we're talking about Tesla thinks that we need terawatt hours a year worth of battery production in 2030. And we're so far from that. There is so much supply that's needed. And I think there's more than enough room for BYD to be a huge. There could be players that are even larger in battery production than Tesla, and that still would not necessarily have any negative impact on Tesla's ability to achieve the goals that they've set for themselves. Like the world needs that many batteries. And so, yeah, I don't see that as a competitive threat at all to Tesla or EV adoption or the world's transition to sustainable energy. I think those are net tailwinds. But it really is a competitive threat to GM, to Ford, to Volkswagen, these companies. I think, if I was Herbert Diess, this would make me pee my pants.
Yeah, I agree. I think this is a much bigger deal to everyone else than Tesla. Tesla will continue to grow.
I think
regardless.
Elon would think of it as positive. It's expediting going clean.
100% agreed. Do you think Tesla would need to start advertising if Elon died tomorrow?
No, they've got a pipeline. Like, you don't need to start advertising until you work through your pipeline and you don't have enough orders. At the point where that's true, you can either lower price or start advertising or some combination of both.
Yeah. And even when GM throws Super Bowl ads out there, Tesla benefits from it. So
Mary led.
That's a good thing.
Yeah. Yeah, Dave Lee talks a lot about how if you've got a product that is 10 times better than anything else in the market, then that allows you to do so many things that competitors can't do. And this is one of those things. That's why we've seen them not need to advertise, because the more Tesla sells, the more Tesla sells. And I don't think that's going to change whether Elon passes away or not. The product is the compelling thing that is creating the demand, not necessarily Elon's personality. And yeah, he's a great marketer, but butts and seats is the ultimate demand driver. And gas prices right now too.
I agree.
And I mean, there's enough people out there. Why would Tesla spend money when he's got all these free people that are so passionate about Tesla doing all the marketing for him?
Yep. Let's do a couple more. I'm interested in your thoughts on a Model C or compact versus a dedicated robotaxi for developing countries. Wouldn't it make more sense to produce robotaxis over compact? This one's interesting because this one is one I've been giving a lot of thought to. And Matt, I think we talked about this on the Good Soil stream. I can't remember exactly where we talked about this, but if it was on the Good Soil stream or somewhere else. But my concern is that if robotaxi were to launch inside the United States, places like South America, Africa, a lot of parts of Asia, Europe, them being like super strict around regulation, robotaxi might take a few years, if not a decade, to potentially be a viable option in those situations. And I just don't. And the lower price EV market right now is non-existent because of inflation, and everyone's freaking making SUVs and pickup trucks, right? So there's like a wide open market for for Tesla to get into a cheaper non-robotaxi car that is smaller in size. So in my opinion, I think, and Dave Lee has alluded to this in the past, and he's kind of the one that's put this sort of seed in my brain, is like those robotaxi and compact car are two separate projects designed for two different markets. So I think they will both happen in conjunction exactly because of that sort of thought process. Developing countries usually don't have the infrastructure for robotaxi to be realistic because it literally, like, sometimes they don't even have roads like the way we would have roads. So, or like traffic lights or anything like that. It's all kind of like a free for all. So what do you guys think about that? That's how I think about that, but curious to hear your thoughts.
I 100% agree. I've spent some time in Bangladesh. I've lived in Africa. There's a lot of places where robotaxi is not anywhere even close to being viable. And but yeah, we still need to transition the world to sustainable transportation, and that includes those places where robotaxis, a long ways away. So I think you're hit the nail right on the head.
Yeah, I agree.
Matt, any thoughts?
No, I mean, I agree. It does seem that from Elon's focus, if you've been tracking how that's changed, it seems like he's much more interested in solving robotaxi than, say a Model C or whatever the compact one's going to be called. But I think part of that's just demand. Like, they had the $35,000 Model 3 for a while, and now the lowest entry point Model 3 is $48,000. It's like $48,490, I think, actually. It's like, so I think the thinking a couple of years ago was that they would need to go significantly downstream in price in order to get market share. But what they've seen instead is just that the product is so good and demand is, I think, a lot higher than even Tesla was expecting. So now the goal is just to achieve, it's 47. Okay. So now the goal is just to, scale production as quick as possible. But I think the way that if I'm trying to understand how Elon's likely thinking about it, he not only wants to get the most vehicles out there, but from a first principle standpoint, you want to offset as many ICE miles driven as quickly as possible. And the most efficient way to do that is to scale robotaxi as quickly as possible, which is going to have a much higher utilization rate. So the same vehicle that you sell, which may have a 5% utilization rate for somebody driving a normal, amount each year, instead can have a, say, 50% utilization rate as a robotaxi. And there's probably some amount of carpooling that's happening with it at the same time. So you think about how many ICE miles you're eliminating with that one vehicle, it's like a game changer. And all of a sudden that's way more important for Tesla's mission than going downstream and selling a few more, subcompacts, which they'll need to do eventually, no doubt about that. But to me, it's like the one goal is way more attractive from a purpose, from a mission standpoint, but also from a financial return perspective. It seems like that's the goal.
Last question. Are you surprised with the 50D batteries on the new Tesla Model Y from Austin? Did you guys see this by any chance?
Is that true? It's ridiculous.
Yeah. So
Yeah.
I think Omar...
Rob was definitely skeptical on that. Something's not lining up. Either their efficiency models that they published are not accurate and being sandbagged, or there's fishy stuff with the numbers. I think that's let's wait and see.
Yeah. If it was 65, I'd be like, wow, that's awesome. But 50, it's that's probably too good to be true.
There was a let me pull up the screenshot from Whole Mars blogs. Where is it? He had it before. Okay, here we go. App hints. Here, I'll share my screen. So there was this picture of the app. Oh my God, terrible UI. What's going on here? Okay, there we go. So the gentleman had his app up and it had 50D right below the name. So 50D, the miles, the VIN. So I mean that would insinuate that there's some sort of that would be a giant, and it's 100 or 200 pounds lighter than the Fremont made Model Y. So it's about 150, 200 pounds lighter, and it's packing a significantly smaller battery pack. So yeah, I agree with you guys. I think there's more data to be seen here. I think we really won't know until Sandy Monroe gets in that sucker and tears it apart, you know?
I don't think it's impossible. I think that, it could be that everything is just software limited and they are, publishing the efficiency numbers just to keep from Osborning their current cars. So this could definitely be a software unlock over time that you get a whole bunch of extra range. Or if the pack is bigger than 50D, or it could be that really is a 50D pack. So I mean, this is a very interesting thing to watch, and it's definitely possible because like the numbers just don't add up. So we got to figure out which way the fudging is going.
Yeah, there was a comment out here for the compact model. They better call it the compact with a Q.
I've always liked the Tesla Q as the next version. Yeah, the version funded by the short sellers.
Tesla Q, I love it. All right, we're over 2 hours. 2 hours, 5 minutes, and 25 seconds according to the timer. Record stream, I believe. So especially for the community forum. Thank you guys very much for joining, watching this cool little thing that we've started here. If you'd like to be part of the discussions, we right now we have it so that our Patreons and our folks that join the community through YouTube essentially have the ability for us to sit down on Fridays and have discussions with y'all. And so if you'd like to be part of the panel, definitely consider it. But at the very least, we'll have the comments section if you'd like to ask questions and have the panel answer the questions and just be part of the conversation. So thank you, Hans. Thank you, Danny. Thank you, Matt, for being part of the conversation. And any last words before we leave for today?
Really enjoyed it as always.
Thank you.
Yeah. Oh yeah, Matt went like this. Last words. Last words. Here we go. Last words. Thank you guys very much. I'll be away next week, but I'll be back the following week. So this will resume in 2 weeks' time. But until then, thank you all very much and have an amazing day. We'll see you around. Take it easy, guys.
Travel safe.
Thank you.